T-Mobile is one of the leading communication network companies in the US and is large enough to compete with giants like AT&T and Verizon. Let's take a look at the financial metrics of this company. We can see that the company's overall revenue has been steadily increasing. However, the situation with net profit is a bit more complex. The company's assets are also growing at an astonishing rate. However, the company's debt has been increasing proportionally to its assets. But before I give my evaluation of this company, please like this video and subscribe to my channel so you don't miss my future videos. My final rating for this company is 8 out of 10. I really like the communications business because it is one of the types of businesses I understand well. This company mainly deals with wireless communication, and I can confidently say that it is a leader in this field in the US. It has already captured most of the 5G market and continues to invest in this area. Thanks to this, it has the opportunity to attract new customers by offering better service at a lower price. Admit it, it's hard to say no to that. I rated this business 8 because it does not have the same issues as Verizon and AT&T, such as high debt loads and the obligation to pay high dividends. As a result, these companies had very little money for 5G investments, which gave T-Mobile the space to dominate this market. I also like a few other nuances, such as the company's willingness to sell its fiber optic business to focus on expanding its wireless network. Looking at the big picture, I think this is the right move because I don't see any chance for a relatively young company like T-Mobile to compete with AT&T and Verizon in the fiber optic market. Eventually, they would have to turn to these giants and pay them to set up this business, which would hinder development in that area. Therefore, in my opinion, it is better to be a leader in 5G rather than being average in all sectors. The most significant competitive advantage, in my opinion, is that Deutsche Telekom, a European communications giant, owns more than 50% of T-Mobile. This is great because, for example, if you buy T-Mobile, you will have better opportunities for traveling in Europe since both companies have a mutual interest in helping each other. In other words, AT&T and Verizon will not be able to gain a competitive advantage outside the US because they simply do not have those resources. T-Mobile, on the other hand, can use this connection almost for free, and there is potential for information exchange and the development of new technologies between the companies, which can also be considered a competitive advantage. In other words, by buying T-Mobile, you get a leader in wireless communication in the US that has strong ties with a leader in communications in Europe. Even if the company cannot expand in the US markets, it has many more advantages in international markets compared to AT&T or Verizon. This is not to mention that these companies have massive debt and dividend obligations that have literally stopped their growth, so T-Mobile has a bright future in my opinion. Everything I described above ensured the company's success from 2012 to 2022. In 2012, the company had about 9 million customers, and today it has around 119 million. And I believe this number will continue to grow as the company has too many competitive advantages. The only reason I did not rate this business 9 out of 10 is that in 2023 the company began paying dividends, which I think is a significant mistake. Currently, more than 17% of the company's net profit is paid out in dividends. I believe that when making such a massive acquisition like the 2020 merger with Sprint Corporation, it is better to have extra cash on the balance sheet to cover expenses and complete the merger to get the maximum benefits, rather than just paying it out in dividends. Today, the price of one share is around $180, or a market capitalization of $210 billion. In my opinion, this is very expensive. I would personally prefer to see a price of $126 per share. I want to point out that even $126 is expensive for this company, but I would be willing to pay a premium for its future potential, so I consider $126 to be a fair value. If you look at its competitors, AT&T and Verizon, their PE ratios are 10 and 15, not 24. So this is a great business, but right now I am not buying its shares as its competitors look more attractive. Subscribe to my channel so you don't miss any of my videos.